Good evening, Mayor, members of council. It's good to be with you all today.
Good to see you.
Catch your thoughts here. For those of you who don't know me, I'm Gordon Jones. I'm the audit partner in charge of the audit. I'm sorry you're just not getting your financial statements. Usually it's a little bit later when we present. You've had time to look over these financial statements. This year the state has a new requirement that the audit be presented prior to December 31st, so that's why you're just not getting the financial statements, or why we're presenting a little bit earlier than we normally would. The requirement isn't new that it be presented by December 31st. There is a requirement that we provide a certification that we have presented it prior to December 31st. So that's what's precipitated this early of a meeting or presentation. I've given you a little handout, a smaller item, one with fewer pages. But before that, I'd like to go over the reports that we issue as part of your financial statements. Those reports are important to you all because this is our communications to the users of the financial information. So it's important that you all know what we're telling the users of the financial. There are 3 reports. They're the same, pretty much the same as last year. There's no new GASB. There's no new Governmental Accounting Standard Board pronouncements. So there's nothing to go over there. The independent auditor's report is a clean, unmodified report. Can't do any better than that. The government auditing standards report, which is a report on internal control, reports one significant deficiency, one that we've had on the books for a while. This has to do with segregation of duties. I'm hoping that once the financial software is fully implemented, that this will be taken care of and that deficiency will go away.
What kind of segregation of duties?
Mostly talking about the Treasurer's Office. The Treasurer's Office is the last one to go on the software package, I believe, or close to it. And once they go on the new software package, we're hoping that clears that up. We'll just have to wait and see. Currently, the process is very manual, and I'm hoping the automation will alleviate some of that. The last report is the report on single audit. It's a uniform guidance report. It deals with federal funds. It's a clean, unmodified report as well. Any questions about those 3 reports? Okay, I'll move on to the handout that I gave to you. It's got the pretty blue picture on the front of it. Let's just flip over to page 2 and 3. There's a lot of numbers on these 2 pages. This is the general fund for the 10 fiscal years going back to 2008. I'm going to concentrate on 2017 numbers, the numbers all the way to the right. Your revenues for 2017 increasing at about 1.79% over the past 10 fiscal years. Expenditures in that last green number all the way down on the right is increasing at about 1.25%. Fund balance for the general fund increased by about $129,000, that $128,869 number. Started off with $4.4 million in general fund balance, ended up with 4.6. Cash balance, a little over $4 million in the general fund. Those numbers are relatively close, which is a good thing. At the bottom, you have a calculation of the operating reserve. General fund balance at 4.5, cash balance at about 4.1. That, when you compare that to the operating expenditures for the city and for the school board, you have about 18% of reserves, 16 on a cash basis. That number increased over 10 years from 13% to 18%, and the cash balance has doubled from 8% up to 16%. Any questions about that? It's good. Over on pages 4 and 5, I provided a couple pie charts comparing 2008 to 2017. Revenues on the left-hand side, not a whole lot of change there. Over 10 years, your general property tax remains at about 48%. In 2008, it was 47%. Not a whole lot of change there. The expenditures over on the right, there is quite a bit of change here. Debt service increasing from about 6% up to 10%. Probably not a surprise to anyone. School or education, and this is the transfer that you all give to education, decreased from about 26 to 20%. A lot of that has to do with the $300,000 that they give back to pay for part of the debt service. And the debt service is not included in that 20%, so that 10% can almost all be added to the education.
Was it included in the 26% in 2008?
The debt service?
You didn't have it. Didn't have debt service.
You didn't have it to a major extent.
It wouldn't have been.
I got you.
The other major change was Public Works in purple. Back in 2008, you had an improvement to the landfill that skewed that number, made it a little bit higher than it normally would be. That was about $900,000 back in 2008. Over on pages 6 and 7, you have 10 years for water and sewer funds. Revenues and expenses increasing at about the same rate at 3.6, 3.4%. Some of those expenditures is depreciation. Overall, your net position for water and sewer funds increased at about $909,000. It started off with $12.8 million, ended up with $13.7, which sounds like a really good number, and it is. But you have to be careful. 9.3 of that money is made up of fixed assets, not something you're going to be able to go out and use tomorrow. Part of that's restricted for debt service at $798,000. Your unrestricted in blue is about $3.6 million. Compare that to where it was back in 2008 at 1.6. So that number's increased quite a bit over the past 10 years. Over on page 8, you've got a debt summary. This shows the debt of Covington, including the school board. General fund debt is about $37.4 million. Of that amount, you have a net pension liability of about 4.884 number. This is your liability at VRS. This was a result of GASB 68, and I hope to speak a little bit more about that in a minute. The water and sewer debt is about $16.2 million. Included in that number is an allocation of that net pension liability of a little over $1 million. The school board's total debt is a little over $11 million. Most of that made up of the net pension liability. And that, again, is a result of the Governmental Accounting Standards Board pronouncement number 68, which required you all to put your unfunded liability on the books. So total long-term debt of the city, including the schools, is about $65 million. Population of about 5,600. Leaves your debt per capita about 11,400. The state average for other cities is about 7,100. So the city does have a lot of debt. I don't think that's a surprise to anyone. Any questions?
Should be a concern?
Should be a concern? It probably should be a concern, yes. Some of these numbers are paper numbers, like net pension liability. Mm-hmm. It's not something you're going to have to go out and pay tomorrow. It's not interest-bearing debt. You've got another post-employment benefit liability, which has to do with health insurance. You're not going to have to go out and pay that off tomorrow. But compared to everybody else that have the same numbers on their books, 11,400 is considerably higher than the state average of 7,120. Another large number in there is the landfill liability, and unfunded landfill liability. It's about $4.5 million. Any questions about those numbers? Over on page 9, I go into detail on GASB 68 and where those net pension liabilities come from. The numbers down the right give you the numbers that are included in your financial statements. The city's net pension liability is about 5.9. The school board's non-professional is about $838,000, and then the teacher's liability is about $9.6 million. There are other numbers that come from GASB 68. They're referred to as deferred inflows and outflows, and I won't go into those numbers. They just confuse everyone. But if you want to learn about GASB 68 and the net pension liability, read these 2 pages. Over on page 11, you have a letter to those charged with governance. It's a summary of the audit process. There's nothing negative reported in this report. It's required by an auditing standard, which I can't remember the number, but it is required. And lastly, we have a few management comments. Probably the first time you're seeing these, so if you have any questions on these, feel free to contact me and I'll be happy to go over them with you. Over phone or through email, whichever way you prefer. So overall, the results were positive. The financials, I think, keep improving from year to year. There is a lot of debt. No way to sugarcoat that. There is a lot of debt for the city. Compliance-wise, you have just a few issues that need to be addressed in the form of management comments and then the segregation of duties, which will probably be fixed once we implement the software. So overall, positive results for the city on the audit for 2017.